Good day. Ira Epstein with your weekend financial wrap-up, and this is for Friday, the 4th of October, 2019, or after 4 p.m. Central Daylight Time, which means we've got all the settlements in. And boy, people are already calling today's jobs data a Goldilocks numbers, as the number came in under the 145,000, but over 130,000 jobs added, and then they corrected from the last month and made things look a little bit rosier. Okay. Inflation, still non-existent to speak of in wages, and the unemployment rate, well, what if I tell you a 50-year low? So the president's out there applauding it. Of course, other people, and the Democrats, they're giving you the reasons why this isn't the best number. The stock market rallied sharply. Now, the interesting thing is the metals didn't get hurt too much on this. I thought that was fascinating. I don't count the copper as meaning too much right now because as we get into Monday's action, the Chinese delegation is in the United States to talk trade. And if we can get something done in trade, copper probably is one of those markets that says, oh, well, one thing might lead to another. All right. Dollar index pretty unchanged, and as you can see, not moving along too much in anything else. But we did see the bonds and the notes get a bid, and we saw the energy market stabilize on this break. So as we look at the monthly area chart of closes, well, we're here only at the beginning of the month. Remember that, and you're down 27 handles. Points it's called, at the beginning of the month, but you're still staying over this 18-month moving average of closes, so the longer-term pattern is still biased to the upside. When we look at this current correction, and it began back here, you can see when the market was up the week of September 20th, we were trying here at 3,013 and a half, trying to get through this 3,024, and then the market started rolling over, and I'm sure that we were talking, well, if it drops, will it find any support at the 18-week moving average of closes? And I don't think you're going to argue very much that we're in that zone, right? And that's what the market has worked itself out to do. It came back to that area to find its support. Now remember, we're only looking in this particular video at weekly charts. We're not trying to go to the dailies. We're not doing any of that. You can see how the market reached down on this break and made up a massive amount of what it lost today, obviously, with a big intraday gain. The pattern on the chart is still on the weekly chart, one of higher lows and higher highs. Therefore, I determined the trend to be bullish because of that, because I look at the pattern of higher lows, higher highs as the definition of an uptrend. I filter that with an 18-week moving average of closes, which comes in right now at 29.50.60. I want you to look at the settlement, 29.51. You can't get any closer to saying that this is the line in the sand, as I like to call it, and the market is just sitting on it right now. To get another oomph, how's that for a professional word, to the upside, you're going to have to get through these highs of 30.23. That's still 70 some odd points away. In the meantime, what you should expect is that the Bollinger Band top, which is right now at 30.49, is going to drop come Sunday night. The way the math is going, the likelihood, it was 30.73, now it's 30.49. I wouldn't be surprised if it comes in against this area, acting as something of a resistance zone. When we look back at the Bollinger Band here, these black dashed lines, you can see the market came down to these support lines and held it. Now, the theory of the Bollinger Band is that the market will trade within them 95% of the time, and as I step back, it's not a bad theory at all. So on this chart, I think that we're looking at resistance up at those numbers, but that's not reason to be bearish. That's called a resistance point in the market. What about momentum? You've got divergence. You have momentum pointing down. You've got price action where I'm going to say the bias is up because you did settle about a half a point over that 18-week average. You still have the pattern of the market in a bull trend. In the Nasdaq, you're fighting your battle at the 18-week moving average of closes. You're stuck within these bands. Stuck isn't a bad thing because how do you break out of them in time? And what I always look for in the bands is, do the black bands start narrowing in? Narrowing in comes about when volatility in the market starts coming out of the market as well. These bands will narrow up because they're looking in terms at range. Here we had a downside momentum, and it's flattening itself out, and we see that in price this week. We finished at 77.67. The 18-week average is 77.37, so we spent this week under it, couldn't make it to the lower band, closed back over it, and in the process, we're still in an uptrend. Higher lows, higher highs. Resistance, wherever that upper Bollinger Band comes in now. In the Dow, the market challenged the 100-week, the lower Bollinger Band over the past 8 weeks. Made a run for it this week in the lower Bollinger Band. It missed it by 30 points, so that's a miss. It came back at the end of the week, though, and here we are at 26,525. You're under the 18-week average, so the bias is down. Momentum, unlike the Nasdaq, is still pointing down, and the market has got a pattern of higher lows, higher highs. Seems to me we're stuck at these 18-week averages right now. When we look at the Russell, let's come back on this and look at it right here. We had a pattern of a lower low, higher high. The market got up to the resistance of the 100-week average and the 18-week as of last week. We finished off the week with downside bias as the market had settled under the 18-week average, no trend. Therefore, the resistance becomes these two numbers if it tries to go up. A potential support, doesn't mean it's going to go there, is the lower Bollinger Band. Momentum, pretty flat, not pointing one way or the other. This week, the market goes down, challenges the lower Bollinger Band. The low this week was 1459, 1464.70 is that number. You tell me what it rallied back up to today, and you're right back to what I call that line in the sand, which is the 18-week average of closes. If it rallies further, I look for resistance to show up right here at the 100-week average. And again, I've got some divergence in this chart. I've got the lower low, higher high, and momentum hasn't yet turned back to the upside. In the VIX, the daily VIX, when we were on the charts Monday through Thursday, I was saying I thought the pros went short at the upper Bollinger Band, and I didn't think they would go through today's numbers. If they did fine, by the way. But this market is stuck at the 18-week average in a general downtrend. Lower highs, lower lows, bias down, momentum flat in this market. In the 10-year note, the market came down about a month ago, challenged this 18-week average, challenged it again 3 weeks ago. Now it seems in line to challenge these highs that the market made. And the question for many traders, I've seen so many people say, now we're not going to go back under that 144 in the 10-year note yield. I'm wondering, you're pushing that right now. Then you get to the TLT, and unlike the futures, there's no trend here. You have the higher high, lower low. The one thing it's done is kept upside bias. It frankly hasn't closed since last April under the 18-week moving average of closes. Momentum in the market is up. The bias is up. I don't see a trend, and I see resistance wherever that wherever the upper Bollinger Band, the black dashed line, comes in. In the dollar index, we are fighting upward resistance in the market. And this is the market, one report after the other. And I get plenty of data that I read all the time. Every trader tell me why the dollar is going to break and it's going to happen sooner rather than later. But I have been hearing that. I cannot tell you for how long. And the dollar is still the best of all of the currencies out there. And admittedly, it's got a lower low, a higher high. And you can almost see how the Bollinger Bands are widening themselves out as the market has continued upside bias. It's knocking on the door, didn't quite get there, of the upper Bollinger Band. And on this weekly chart, it's done a really good job of each time hitting that it hits it, it seems to back off, and then it keeps arcing higher and it comes back to it. Until that pattern's broken, I'm still long-term friendly to the market, bullish it. In the eurocurrency, the trend is down. Lower highs, lower lows. Could that change? Yeah. If you were to get up over 2 weeks ago's high, right through here, the 111.48 zone, that would negate it, but you haven't done that. So the pattern is still bearish. The momentum is flat, and the bias is down. Support, the 109.09 area. In the Mexican peso, I would be careful about this. First time you hit these Bollinger Bands, this market has shown a propensity, and you've done it again, to bounce away from it. So I'd be very, very cautious. I think traders look longer term at these weekly charts to try to figure out where to go. We're just now a couple of weeks off from whatever the election is going to result in Canada. Right now, until you take out this week's high in the Canadian dollar, the trend is down, the bias is down. As you can see, you're under the 18-week average, and momentum is down. You'd have to take out this week's high to negate that pattern. Japanese yen whipsaw for what is it, 5 weeks? Well, 4 weeks. Back and forth against this 18-week average. The pattern, well, in looking at it, this low this week at 92.64.5, did it take out this low? 92.37, no. So what I should have done is, instead of this arrow pointing down, I should have this arrow up with it, which is a trend is up. I've got higher highs, higher lows, just my error there. And the momentum is flat but trying to arc to the upside. If it moves to the upside from here and doesn't take out this week's low, you're putting into play the potential for the upper Bollinger Band as another level of resistance. In Bitcoin, you have a higher high, lower low pattern, but last week you got to this lower Bollinger Band, and as I often tell you, the first challenge of Bollinger Bands, be it to the up or down, is often where the pros take some money off the table. In the longer term chart pattern of Brent versus WTI crude, both have been under this 18-week average, where that peak was about $9 difference, and as you can see, you're down to about $5.56. And when we go to the energy markets, I think it was an important week this week. Again, the first challenge of the lower Bollinger Band does not mean you're going to turn up, but it's often a spot pros take some money off the table. The pattern is one of a higher high with a lower low. The momentum is down, as is the bias, but you have hit a downside target. The same is true of WTI crude. As you came down to it, you stalled. You've got the lower low, the higher high. We saw the resistance at the 100-week in the upper Bollinger Band. I think the smart money's taking some money off the table here. In the rebob, the market is now to the point where it had hit these lows, came back for that 18-week average 3 weeks ago, failed up there. It's kept the pattern of staying under that number, but you've got also the lower low, higher high. I don't see a trend out of that. I see a market that's flat in momentum, biased down, and not trending. In the heating oil market, I'd be cautious here. We're getting colder. There's going to be demand for heating oil. You know, just think about that idea. Natural gas too. You'll get to a point where there's some demand that comes in. This market's got higher lows, higher highs. I'm going to say that in this particular market, the settlement at 189.45 over the 18-week average. So I've got bias up, trend up, and I have momentum that could turn down. So there's a bit of divergence, and the market's fighting a battle from the looks of it at the 18-week average of closes. If you like this, you're probably going to like what I do in the mornings. You know, each morning what I do for my subscribers is I start recording at about 6 a.m. Central Daylight Time. And in the recording, I review all the different complexes in the futures market along with 5 ETFs. On those ETFs, they will relate, be it to the TLT, to the bond market. We'll look at XLEs. I'll look at SLV versus the silver market. You get the pattern that I'm doing there. And as I'm putting those together, what I'm trying to give you before the markets in the U.S. really get going after 7:30 a.m. is what's going on, what to expect. I've already seen Asia, so I can tell you what's going on there if there's importance, and Europe at that hour, and now America's coming into its own. So before most of the American reports come out, like I did this morning for my traders, we talk about the jobs data before it came out, what I'm looking for, what might the algorithms do. The whole cost $7.95 for 30 days if you haven't tried it. Most people that buy that, they'll stay with it for the next 30 days and so on. Quite a few of them do buy the 1-year subscription if they want that for $156 for 12 months. So it's not expensive. That's the point. If you think about what's a tick in S&Ps, a tick in gold, it's more than this $7.95. Give it a try. Go to our website, www.iraepstein.com. Under the word research, you're going to see morning subscriber video. Just click on that. Actually, as you get to research, the the menu will drop as you want. Just click on that. It explains everything. There's a fact sheet and what you do, and you'll see it up here. Now remember, I am going to start doing more special reports, and privileged access is going to start developing for my subscribers and my clientele. So you want to maybe take advantage of this. In the meantime, I'm Ira Epstein. You have a great weekend, and I'll see you Monday.